Hi traders, Nick Shaheen here, recapping the week of July, ending July 7/18, and looking into next week for Benzinga. Check me out at MarketFi. Do have a product out there, create income with option spreads, among other ones too. You can reach out to me through the message system of MarketFi, works very well, or you can reach out to me via email, sellspreads@gmail.com. And do follow on Twitter and StockTwits. That's me out there, Racer Nick, no K. Email, social media, MarketFi message system. Pretty eventful week, to say the least. I think I've said that the last 3 weeks. Although, to contradict it, I also said something that I didn't know was going to be so prophetic, which was much has happened, yet nothing has changed. So what does that mean? It means that the stalemate continues. Much has happened, yet nothing has changed. This is this week. With all the craziness that happened, look at it. I can draw a straight line in the S&P as if nothing happened. And if I extend it further out, it'll probably be nothing too crazy. But the fact is that from week to week, the fight continues. And I think it's a byproduct of a couple of things. Number one is the bulls have no conviction in their bullish thesis. They do talk it, they do act it, but they can't sustain the actions. And I think you can best see it in the volatile names like the momentum stocks. They have one good day of incredible green, and then they give it up, if not all of it, most of it, the next day, over the next couple of days. On the other hand, you've got the bears who are doing just enough to keep things in check, and they're being stubborn at the 1950 SPX line, and they keep rolling the underwater positions from week to week. But they're not taking advantage and not pressing the issue. Yesterday was. Here's how I see it. If I was a bull, I would say to the bear, "That's all you got." They were planes falling out of the sky, war zones erupting. You got ground troops in Gaza, and that's all you got. And I get back everything you took yesterday. I get back all of it today, and then some in some cases. So that's the bull saying that. The bear is saying, I don't need to work too hard. I'm doing just enough for you not to be able to go too crazy, and definitely not like last year. So that's creating an opportunity for me. I like to trade credit spreads, so I like to sell risk outside the ranges, which this tug between bull and bear is creating pretty tight defined ranges, and they're tradable. We're doing it on MarketFi. You can check it out, and I'm doing it via credit spreads and a few debit lotto spreads, which I will talk about a little later. Now, as far as if you look at line charts, it probably won't tell the story. You have to look at what's going on within. So if I looked at a line chart of any stock, it'll be a lot straightforward than this. What is this, Visa? Okay, let's look at SPX. I wanted to talk about the SPX. A lot of lines, I know, sorry about that, but I'll point at the ones I'm looking at here. Most importantly, you know how they say support turns into resistance, resistance turns into a support, past resistance turns into a current support. So here are two cases opposite each other. I'll start with the most recent one. Most recently, I started trending the dashed green lines. I added these green lines to highlight to the members the fact that we have a rising wedge of sorts, and I don't like these for the bullish side. I do think that they're most of the times are bearish, and they tend to break down. So what happened here is it did break down on a few days ago. That was the 9th, I believe, and that's the SPX, by the way, and that's a 1-year daily chart. And it did break down, and then the next 2 or 3 days it recovered, but then is bouncing up against that green line and failing. Even a couple of days ago when we were bullish, and then yesterday's candle did a lot of damage. So here I said, okay, the technical damage has been done on that red day here, and psychological damage was done too. I had a whole write-up about it. You can look it up. So now we were recovering, and then we get a day like yesterday, bam, the technical damage got worse. Psychological damage, I don't think so. It wasn't psychological. It was the fact that there was headlines, two headlines to be exact, and we had two legs down. And today we just erased all of it. That's SPX. But now that brings into this candle, this big red candle brings into, so anyway, I was saying this was support. You can see here support, 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 support on the way up. And now it's resistance, 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 and now it's no longer resistance. Now it's a matter of fact that SPX needs to reestablish its momentum upwards. If not, maybe some bearish plays out here. Now I can see, you can draw a line down here and see how that's going to go. But I'm not, sounding any bearish alarms like, sell everything. So I'm taking both sides of the fence, and that's the point of my trading. I sell spreads wherever we're not, and wherever we're not going, and then those spreads I can book profits on them. So that's why I argue both sides of the fence. Now another instance of support resistance switcheroo is this dashed line right here. Now it's solid, now it's dashed. Shit. That one right there. Oops. Come on, go away. Okay, so here it was resistance, 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 failed miserably, and then resistance, then guess what? Peak, above the 1900 peak, well, and then support, support, and then we got away from it, support on this big candle right here, and now it's back to being an important support. So as long as we maintain this uptrend there, the cause is not lost for the SPX, in my opinion, for the bulls. And the bears have a chance at containing it under this one. So see what I mean by ranges? So it's a matter of finding levels, finding ways you can monetize these theories or these hypotheses, that any notion. And I'm getting ideas from members saying, what do you think about this and that? And I was like, boy, I'm impressed. I mean, they're learning, they're doing their own trades, but they're taking the data that we provide and then trading accordingly. And it just helps to have a whole community of people thinking the same way and acting in different ways to accomplish the same thing, I should say. So there are plenty of ideas. You like credit spreads, you can do them. You like debit spreads, you can do them. You can do both. That's what I'm doing, and I'll cover that a little bit later. I like to do debit spreads. I just don't want to pay for it, and if I can scalp it, I did share last week the Tesla trade, and I also last week said, good transition, wow. Last week I said pick on Tesla. It was looking ugly on Friday. So let me switch grids here and prime Tesla here to show you what I mean. Last week I said let's pick on Tesla because, and we did win. I scalped a win in Tesla, a bearish win, without having to put out any money. It was I just put out a little risk and it was fine. And then I said on Friday, right here, I said let's pick on Tesla again because it's still acting badly. And sure enough, it opened badly. And on this part right here, see that little red bar right there? On Monday it opened weak. So I had a short in Tesla and I booked it for a very mild win, but it was a win nonetheless. And then out of nowhere we get this stupid run up in Tesla, right? Giant. Look at this, bam, bam, up to here. I was like, what's this all about? Nobody knew what it was all about. It was a couple of, something about China and credits for batteries, whatever. So I didn't do anything, and I let it simmer a little bit, and then I decided to reshort it, and I reshorted it, and I booked more profits in it. So if you had picked on Tesla and did nothing on Monday morning, then you probably broke out even, because if you had the stomach to live through this one when you're short, because if I can draw a line right there, so it went nowhere. So it went back to weakness. I was right about the weakness. Take that headline out, and that chart would have continued on down like this. So you take this portion, just shift it down, and it'll just continue down. This is an unusual headline reaction, just like the SPX drop was a headline reaction, this one right here. Okay, so much ado about nothing. SPX, this is the cash, straight line right there. Small caps, today they had a good day, but they were kind of in line. They weren't leading much. So I like to see them lead, although everything was up so much today. It's hard to say to poo-poo on that. But this is the last 10 days in the small caps right here. Still negative. So they're not out of the woods yet. I would still be gutsy enough to short that via credit call spreads, and members know what I'm talking about. And so that's the story, macro. That's the story about follow up on the Tesla Lotto picking on weak tickers from last week. I also may have mentioned a few other ones like Caterpillar, and I'm still in that picking on at it into earnings. So here's what I'm talking about. Um, Lotto tickets. I say lotto trades all the time, meaning small priced plays that have relatively low chance of success, but also have a decent payout. So what I'm doing around earnings, those are great because what I can do, for example, if I see a setup that's bearish a company, okay. So let me use Caterpillar. I'm giving away some money here. Anyway, where is it? Caterpillar. Type it in. Okay, if I think this is looking bearish, which it is to me, but it has looked bearish to me for the last gosh knows how many points. So, and they're going to report earnings soon. I do a debit spread in it, a debit put spread, and I can kind of neutralize time because usually when you buy an option um, or a spread, time is against you and it's killing your asset. But during earnings, the fact that there's the earnings coming up, time is kind of neutralized and the premiums will stay elevated. So as long as price doesn't run away. So I'm okay holding my shorts in Caterpillar, and they're just debit spreads, and it's money thrown away. I know it's a few $100s that have the potential of paying me thousands. I don't mind taking that bet. It's still a lotto trade because it's based nothing, well, somewhat technical, mostly technical and somewhat fundamental. I just don't see the growth that's going to drive Caterpillar. I could be completely wrong. I'm not an expert on its fundamentals. I know they have good management. I know they're a long-term company, blah blah blah. But we are at all-time highs in everything, and the price it's at right now is just insane, in my opinion. So I expect a drop. I don't know. Earnings are kind of binary, so hit and miss, and it depends on how people react to the numbers, as I always say. But looking at this chart makes me say, okay, the downside is more likely than the upside. But some other technical dude might say, oh, this is like it's trying to form a handle for a giant cup, and it's going to be up to like $150 in no time. Possible. Don't know. I'm taking the under on that one. So that's picking on stocks. So I find situations like this. So let's say if I wanted to look at Netflix, okay, similar setup in Netflix today had the chance to break down. It didn't, so that's kind of bullish. But if I wanted to pick on it, either way, I can do that because it's a good lotto ticket. We know it moves a lot. Remember this candle right here on earnings? This is earnings. This is earnings. So if you get to take a lotto ticket, why not take it in Netflix? I'm going to spend a few $100s on Netflix and see if I can pay myself a few thousands. But again, it's a lotto ticket, so you have to not cry over the fact that you may have lost the thousands. It only takes one to pay for a whole bunch of misses, and hopefully you win more than you miss. So overall, the picture, it's a decent way of making a buck. So that was another thing I wanted to cover. Use the earnings volatility in order to choose good lotto tickets. Now, speaking of earnings, another thing I wanted to pay attention to, which I haven't done yet, so we'll do here and see. There are a few names that reported and the street loved, and I just wanted to see after the fact what happened. I think BlackRock was one of them, and they reported, they loved it, they peaked right here, and then they immediately rejected it. So that's not very good for it or its friends. The JPM report, yep. So they popped, ran a little bit, and now they're trending back down. So Goldman Sachs, I do believe, is bullish. This formation, according to the built-in filter, technically you can argue for a breakout. may be worth a lotto ticket. If you have a lot of lotto ticket shorts, why not take a few that are long? And if it doesn't work out, you can always sell a spread and make up the money. So, I had a couple things drawn on a different chart for it, and I could argue both sides of it. But since I see a little breakout here, I'm tending to believe the upside more than the downside, but I'm not putting money on the line for it. The MACD is also conducive of it. So, this thing is so violent, and I don't understand why. I mean, they always deliver, they're crankers, but it's, I guess, the environment that we're in. They move in tandem. I mean, one could argue there's head and shoulders everywhere, right? But I'm not trading Goldman Sachs because they tend to be headline driven, and I don't like headlines. So one can argue a good bullish play on the Goldman could pay off, but I'm not in it. Yahoo was another one where immediately after the report, they loved it and immediately cranked right back down. So, and look at that, pretty ugly, knocking on lower levels down here and here and here from lower highs. So imagine that somebody's bouncing on a board, and they're bouncing harder and harder, and the bounce up is getting weaker and weaker with the bulls trying to run up. So eventually that board is going to break. Sometimes it's a springboard, they bounce right back up, but I don't believe in Yahoo, as I don't have, I should say it nicely, I don't have a lot of faith in their leader. A lot of yak, and I don't see anything groundbreaking. It seems like they're falling behind, and all they have is the Alibaba. Now Alibaba could give them enough cash to give the price a boost, but fundamentally I just don't believe in their strategy. Okay, having said that about Yahoo, I can move on. I insulted them enough, right? Intel, I picked on it. I took a lotto short. Obviously, I was wrong, and luckily it was just like $50. I threw it last minute, but then after the earnings at the highs, I doubled up and put in a pretty decent size short with time on my side for August and September. These are not shorts for the portfolio for members. These are personal shorts, and they're debit put spreads straight up. One for August, one for September, and it's a bet I'm willing to take. We're at all-time highs. It's at not all-time highs, but it took it 10 years to get back to here, wherever. This is 10-year chart, by the way. Maybe they are all-time highs. Let me go 20. No, never mind that. So this is 20-year chart. It took it 20 years to get back to not even where it fell from. So people say, oh, I heard somebody say maybe it was Kramer. It still has room. Okay, you can look at it that way. Or you could say this was an undeserved peak, although it did last a while. So I'm not sure that we can get back up to here. So, I took the under on that one. And again, since I have time on my hand, if I see it going, still carrying momentum, and the whole market is moving up, I can always unwind it. I can sell them for a loss and walk away. For now, I'm holding it and a few other ones. I am selling spreads. I am bringing in cash. Some of that cash goes to put in my pocket and buy myself a sweater, as they say, and the other finances some debit spreads in order to do some lottos here and there without going crazy. Stay away from trouble. Whatever trade you do, give yourself room for plan B. You get oh crap moments. You got to cover those moments. You can't get down to the wire with a play that puts you back against the wall, and then you end up with a 50-50 shot, or walking away a winner or a complete loser. So leave room for plan B. Weeklies are exciting. You don't have to trade them down to the wire. You can trade the weeklies and close them early and still be just fine. Or play them 2 weeks in advance instead of 1 week in advance. So these are all good things. Now the VIX shared the fact that it broke out, these two lines that I drew right here, and it showed us its might yesterday. Today it gave it all back, I think, but it's still above there. But I also said right here, don't buy calls in the VIX. I mean, if you want to short the market, there are easier way of doing it. Straight up puts in the market would be better. Even in double and triple leveraged inverse indices will be better than buying calls. For me, I can monetize those better than the VIX. It's been a mystery. It's kind of a broken gauge. I use it as a gauge of market um, market inattention to possible pitfalls that we have out there. We have major possible pitfalls out there. The Gaza situation, I think, has incredible potential to be bad. I pointed it out when nobody was listening to it a couple of weeks ago that it became my number one situation, alert situation. It surpassed the Ukraine. So anyway, now we're getting a little more inured to, or a little less sensitive to these headlines. So we will move in smaller magnitudes, but the problems are all still there. So let's see what happens over the weekend. China is going to have some economic news coming out over the weekend, so I'm going to look out for that. And yesterday, I think I heard the China government say, growth under 7.5% GDP is okay or acceptable or something like that. So are they priming us for a bad report over the weekend? I'm not sure. Keep on the lookout. Again, this is Nick Shaheen. Create income with option spreads on marketfi.com for Benzinga. Talk to you all soon.